MULN Automobile has been one of the most exciting stocks to appear in the trading's radar so far this year, and many are wondering if this bullish run is going to continue. In this video, we're going to talk about MULN Automotive, trading under the ticker symbol MULN. At the moment, the financial market is very volatile, and we should be careful about which stocks to pick, as well as their exposure and our timing. This video will cover the recent price actions and the technical aspects of the stock. Before the video begins, a quick heads up that my analysis is based on sessions already completed and that it may not take into consideration the latest events. If that's the case, I'm going to make follow-up videos to reflect them. With that being said, let's begin with today's topic. During the most recent trading session, the stock increased to $2.70 before closing the trading day at $2.65. We should pay attention to the $2.60 level nearby because it was tested and has been a significant support level in the recent past, and we should see that the current momentum can be held from that point onward. This is going to be significant. Over the past 30 days, the trend of the stock has been bottoming out from the previous bearish trend, and it is currently showing strong signs that it will recover back. From the perspective of longer time frames, the trend of the stock is bearish still, since the startup scene, much like the EV sector, took a very heavy hit from the market sell-off and the short sellers earlier this year. This is slowly recovering, and we should see a significant catalyst sometime maybe in the next few months. But still, things are volatile and fragile at the moment. When we look at the price trend overall, it has been accelerating the reversal tendency of the stock, as the recent price actions clearly demonstrated that the market is showing its clear desire to push up the stock, simply because the downside is now so limited that the only logical way is up. The trading volume of MULN Automotive is recently 88 million shares, compared to the average volume of 235 million shares. Over the previous 52-week period, its price has been fluctuating between 52 cents and $15.90. The market cap of MULN Automotive is currently around $95 million versus the enterprise value of $113 million. The difference between the market cap and the enterprise value is the premium or discount the financial market is willing to allocate to the company based on its current fundamentals, leverage, and asset composition. The enterprise value is the combined value of the company's assets minus the debts. If the company has a lot of debts or a negative image amongst market participants, the assets value and the market cap may be impaired. With that being said, at the end of the day, this remains an estimation of the market value every time it publishes its financial statements, so it's less reactive than the market cap per se, and often more lenient as well. One key element to note regarding the enterprise value is that for many growth-type companies, one of the most significant assets they own is called goodwill. Goodwill is an expectation of the market that a company is able to generate more profit or grow faster than others, partially because it may have a better management team, a stronger brand recognition, and a bigger online following. It is what makes a company unique compared to its competitors. In other words, it's not a tangible asset that companies may use, but it's often the reason why some companies are perceived to be trading at a discount, because the market cap is lower than the enterprise value, and because it's also less reactive than the market cap in very volatile situation. If the company goes to liquidation, there won't be any goodwill left, and we would be left to distribute amongst shareholders and debt holders what is left on the balance sheet. When we compare the current price to the historical price fluctuations, the stock is 250% higher than the 1-month low, 410% higher than the 3-month low, and 410% higher than the 52-week low. On the options market, which often gives a hint on the market sentiment about where the stock price is likely going to go next, the implied volatility is 209%, versus a historical volatility of 364%. The put-call volume ratio is currently at 1.12. It is normal for many stocks to have a higher put option volume than what they deserve, as many institutional investors hedge their long positions by buying put options. The most recent volume of options traded is 65,000 contracts in a day versus the 30-day average of 73,000. For the open interest, the most recent volume of open interest is 570,000 contracts versus the 30-day average of 266,000 contracts. For the shareholder structure, institutional shareholders own currently 0.5% of the outstanding shares. This is a very small percentage, considering the normal holding percentage of 4%, but given the very high volume at the moment, it has been decreased significantly. The biggest shareholders include Vanguard, BlackRock, and iShares. It is relevant to understand the shareholder composition of a company because this can help us to determine if you should hold the stock long-term or to view it as a trade opportunity. If the stock is mostly held by retail traders, this can be a sign that the stock lacks the depth to justify long-term trust from shareholders. Typically, the consensus is that there should be at least 25 to 30% of institutional participation for the stock to be perceived as a sound investment, and not just a short-term trade. This is obviously subjected to a lot of exceptions, as many great titles can be mostly held by retail investors as well, but that tends to be the exception and not the rule. Let's also take a look at the short interest present in the stock, which is the amount of positions aiming to profit if the share price falls lower. Sometimes when there are significant short interest in the total volume, this is a sign that there may be something organized going on. The current short interest is 20% of the total float, and almost 50% of the transactions coming out of the dark pools. Overall, my opinion on MULN Automotive is clearly bullish, and I believe that the stock will enjoy some significant volatility in the near future, and they're likely going to be favorable for a long position. So, for the immediate term, my recommendation is to buy the stock, considering the recent price actions and the promising price levels that are close to where the stock is at the moment. The maximum exposure I would recommend is 3 to 5% of the portfolio, and I would also recommend to separate the allocation in batches of 10% at a time so that you can have enough room for later purchases. Your investment should also take into consideration the market conditions at the time and the surrounding sentiment that determine what kind of asset should be picked, for how much and for how long, and when you should be selling it. First of all, the financial market doesn't reflect the real economy. That much is a fact. If the stock market is doing great, it doesn't mean that the underlying company is necessarily hiring more people, increasing the wages, and rising the living standards of its employees. Sometimes it's even the exact opposite, because the stock market is a big pool where money comes in and out, goes to different places in order to be placed. The capital may be used to be invested in a company to improve its efficiency and productivity, but it can also be used to buy up shares and assets in order to make a profit. This phenomenon is called financialization, and it means that the more money is been used for non-productive purposes like mergers and acquisitions, paying dividends to shareholders, buying back equity, and so on, the less there is for the productive parts. Another way to put it is that ever since 2008, the Dow Jones Index has increased its value significantly. But people don't necessarily see this growth in the main streets. This is why we should be careful with the assumptions of what rising prices mean for a company. Sometimes it doesn't mean anything, other than the fact that the asset is getting more expensive and that their yields is going down. Additionally, some new phenomenons are now palpable, and they are the creation of new bubbles, the participation and influence of retail traders in specific situations, and the anticipation of a massive recession or at least pullbacks. Bubbles have always been created over and over during the past few centuries, ever since there are financial markets. But nowadays, it's quite interesting to see that the speed at which they are created, attract people or capital, and then go bust is getting faster and faster. So almost immediately after the major collapse of the market prices back in early 2020, the same market decided to create a massive bubble of the electric vehicle sector or anything that is related to it. So almost immediately after the major collapse of the financial market back in 2020, the market then decided to, one, recover any sort of price that fell during the first 3 months of the year, and then attract a massive amount of capital into the EV sector or anything that's related to it. Stock prices across the board, but in the growth stocks in particular, went up to the sky for a moment. And even if it didn't last long, this episode definitely allowed market participants, or many of them, to park in their money in a sector and left with either a lot of profits or at least avoiding incurring large losses because they left their money in blue chips or the sectors that are heavily affected. The involvement of retail traders in companies has also been much more pronounced in recent months. Because in the scenarios of a short squeeze, companies may have short sellers who believe that the stock will decrease in value. The short squeeze consists of buying the stock price up to force the short sellers to recover their positions, which will then trigger even bigger increase in stock price. But I'm not saying that this is always rational, and I'm not even saying that companies will always have a very convincing narrative or good fundamentals. Sometimes there's none of that. A good example is with GameStop. If you play video games, ask yourself if you would really always buy your games at GameStop, knowing that you would be buying those games online as well, or knowing that at least you have the capacity, the right to buy those games online in the comfort of your home. But nevertheless, retail traders do have a much more significant influence in the stock price, for the better or worse. Personally, I think that as long as the volatility is high, it'll create opportunities. The final phenomenon is the anticipation of a recession. Many people are expecting something of that sort to happen ever since 2008. There were quite a few companies that were supposed to go bankrupt because of the debt structure no longer sustainable, or that their business model is just bad. But somehow that system was able to hold its ground, especially in the North American market. This is partially because the capital around the world chooses to come to American capital market when things get heated back home. This is especially the case when geopolitical tensions increase around the world. In order to make sure that the capital can provide steady returns without being affected too much by central bank policies and inflations, this phenomenon will intensify over time. The bottom line in all this is that the environment is getting more uncertain and volatile in a context where asset yields will probably remain low because the real economy cannot just improve because the asset prices go up. As far as we're concerned, that means that the patience of market participants over the next couple of years will be a great virtue, and that there will be plenty of opportunities to eye for better prices. With that being said, always make sure to keep your positions diversified and your risk level under check. Your speculative positions should play a relatively modest part of your overall portfolio, so thanks for watching. If you like my content, please like, comment, and subscribe to my channel.